All right, great. Okay, cool. Nice to see everyone. Thanks for coming out to this. I'm really excited we get to talk about censorship resistance. I feel like this is regrettably underappreciated in crypto, and I think a lot of the talks today have been about how we can get yield from TradFi and bring it on chain. We're going to be talking about the opposite of that today, and how we can do censorship-resistant DeFi, censorship-resistant stablecoins, and I'm really excited to introduce the panelists here. If everybody could give a brief introduction. I'll do mine first. I'm Nate. I'm the founder of Token Dynamics. We're a protocol design firm with an emphasis on economic security. And I'll introduce the panelists here, let them give a quick intro of themselves.
Hi, everybody. I'm Kirk. I'm the founder of the Ethereum Credit Guild, which is a small, recently launched Oracle-free lending pool. But setting that aside, I also have a real passion for DeFi privacy and something I've read a lot and written a little about. So yeah, happy to be here today.
Yeah, I'm Ermin. I helped start DHedge, which is an on-chain vaults protocol, and FlatMoney, that's a decentralized FlatCoin. Essentially, the complete antithesis of real-world asset. It's purely on-chain, not pegged to the US dollar, which is also something that's uncommon at the moment, and basically a native on-chain yield-bearing asset.
Hey, I'm Nick. I'm the founder of Chronicle. Chronicle is an Oracle protocol. It was actually the first Oracle protocol on Ethereum, kind of dating back to the launch of DAI in June of 2017. And we secure around $8 billion in TVL and DeFi right now, making us the second largest Oracle after Chainlink.
Hi, I'm Michael. I'm the CEO of Liquidity. We are the builders of one of the most sovereign stablecoins, LUSD.
Awesome. Yeah, so thanks for joining the panel today, guys. It's going to be more of a free-flowing conversation, and I'll call on people if I need to, but I would love for you guys to just jump in whenever you're interested to answer the question. And so to frame this conversation, I want to start by asking, why is censorship important? Is censorship resistance important in crypto and in DeFi, and maybe as it relates to stablecoins? Or why is censorship resistance important to you? Because each of you have built your protocols in a way that's taken on additional design constraints. It's much more difficult to build something that is censorship resistant. So feel free to answer the question in either of those two ways. Maybe, Ermin, can you go first?
Yeah, sure, I can start. I mean, the dream to build, I guess, internet money started even before crypto, before Bitcoin, back in the dot-com era. PayPal, that was one of their original mission statements, and they were just too early. And if you fast forward, say, to the 2017 era, when there was a lot of grand ideas that were happening, many of them failed. But if you told me back then that what would be used as essentially on-chain money today, what would be used for value transfer mostly, what would be the main unit of account, if you told me that was US dollars that are sitting in banks, I wouldn't have believed you at the time. Yet kind of here we are, and obviously stablecoins found market fit with leverage and also the ability to escape volatility on-chain early in the DeFi days. But it feels like that's kind of no longer a critical factor, and you can see some of the topics today are more about yield-bearing, again, US dollars to try and sort of take things to the next level. But the narrative is we need your real-world assets, we need TradFi systems to actually facilitate that, to give legitimacy to the on-chain world. But I think we've only just started scratching the surface of kind of what we're capable of to do on-chain, and I really think it is possible to create new primitives, pure on-chain primitives that are orders of magnitude better than the traditional financial system. Backing, I don't want to take up too much time, but backing a stablecoin with ETH, like what Liquidity has done, many people have said, oh, well, that doesn't scale. There's a real problem there. You have limitations of ETH, but I think that's completely wrong. And what they actually mean is, the volatility of ETH is too high. So when you mint a stablecoin, like Liquidity's LUSD, you are by default riding the volatility of ETH. That's great in the bull market, as we've seen a lot of growth. But in the bear market, the minters, risk liquidation, and that's not so good. So at FlatMoney, what we've decided to do is build an on-chain delta neutral strategy backing it with Rocket Pool staked ETH, which we think is the most decentralized LST. So when you mint the stable coin or the flat coin, you don't have to ride that volatility of your collateral, and we want to back it with the best collateral that we can.
That's great. I appreciate the insight there. And something you mentioned is that there's a different use case maybe for censorship-resistant stablecoins than there is in centralized stablecoins, where the centralized stablecoins are used for remittances and things like that, maybe as units of account. What is why build a censorship-resistant stablecoin? I'd like Michael to answer this. Actually, Niklas, you went for it, so go first, and then I want to hear from Michael after.
Well, I just want to. I would love for you to answer this question next, but I just want to frame this conversation in the context of what does censorship-resistant and non-censorship resistant money look like in not crypto, right? And there's a spectrum, right? Because you can say, oh, US dollars, they're not, censorship resistant. Well, if you have cash, they kind of are, right? The US is not a country that really has strong capital controls, right? Yes, you need to abide by sanctions, right? You can't send your money to North Korea or Luhansk and Donetsk, right? But for the most part, right, US dollars can flow fairly freely. To give an example of something, that's not censorship resistant, I think you should take a look at, all of these countries that have capital controls. You look at, Venezuela, Argentina, Turkey has capital controls, South Korea has capital controls. And there's many, many more countries like this, right? Iran has capital controls. And what that means is you can't take your money out of the country, right? It's forcing you to spend your money domestically and only invest it domestically, and essentially trapping you. And so what essentially happens is as soon as you try to stop people from being able to do this, right, now everyone's heading for the exits, right? They're trying to get out in whatever way possible. And that typically leads to a lot of inflation. Or it's more maybe a chicken and egg scenario, right? Of does the inflation, cause capital controls, or do the capital controls lead to inflation, right? So that's a problem that was almost solved by crypto in a way. And so if you look at where crypto adoption is highest, it's in those countries with capital controls, right? It's in Argentina, it's in Venezuela, it's in Turkey, right? Those have the highest users per capita of crypto, bar none, way more than the US, way more than Europe, right? Because that's the real use case of censorship-resistant money. And so with that, I'm going to shut up and let you bring it back to stablecoins, but I just wanted to frame this conversation more in what does censorship resistance actually mean, and how is it valuable to people?
And I picked it up, to be very blunt, I think it's the wrong framing. We shouldn't, and a dangerous one, we shouldn't be talking about censorship resistant. For me, it's about financial freedom. Why we build what we build is to give everybody the tools to have this freedom, to have the choice. Do I want to have a state-issued dollar or something else? And I'm in the belief that money also belongs to the people. I'm fine if state has people, but I want to have options. And I think that's the driver. That's what this technology enables, having optionality and the freedom to choose what you think is right and not being dependent on anybody. And I think that's the beauty, and that's for me the more important, more powerful framing.
Yeah, I think that's a more generative framing. I really like that. The positive aspect, rather than defining ourselves by what we're against, defining ourselves by what we're for. And I think within that, there's sort of a broad spectrum in crypto of what is maybe freedom promoting money, or what choices there are on the what we would call the censorship resistant side of this spectrum, and then the censorable, potentially censorable side of the spectrum. Like Niklas talked about capital controls, we've got OFAC, other agencies that are trying to shut down people's ability to transact in different parts of the world, and for a variety of reasons. It's not just criminals, it's people that governments will define as criminals like Julian Assange. It's not just people that are trying to launder money through various venues. But so in that spectrum, I mean, where where do you guys think, I think we heard from Michael a bit, that we want to be on the freedom promoting side of the spectrum. We're here talking about censorship resistant stablecoins. What are the other major points on the spectrum, like from very censorable and very centralized to very decentralized? Like, what are the things that stand out within that spectrum that we can speak to? Kirk, we haven't heard from you yet.
Well, I guess what I'd like to bring into this conversation is a part of censorship resistance that is, in my opinion, neglected in the industry, which is privacy. And so, in terms of the point on the spectrum, this is going to be one point further than what we have now, in the sense that, Niklas, was that? As Niklas mentioned, there is really nothing in crypto that is a true digital cash today that you can, a Bitcoin is not like a gold coin, right, that you can melt down and recast into a new gold coin and no one will know that you ever did that. Even with privacy mixers like Tornado Cash, there's always this stain that, oh, it passed through this privacy mixer, right? We know that you have done something to try and hide its origin. And this presents a real challenge. When Satoshi wrote the Bitcoin white paper, it was never intended to be a store of value or a speculative asset, right? He was talking about censorship resistance through the removal of trusted intermediaries. And that's what also, non-USD collateralized stablecoins like Liquidity or FlatMoney have done, right? They focused on removing custodians, centralized intermediaries from the collateral chain. But the one thing that's missing, in my opinion, for stablecoins to truly be a digital cash is the normalization of privacy. And unfortunately, this is not a technological problem, but rather a political problem, right? We know how to make private transactions. The problem is that they're being persecuted and criminalized. So I think that that's an area for advocacy and for legal work, and should be a more and more important conversation for us.
Yeah, absolutely. 100% agree with that. I would love to see more privacy on Ethereum in particular. I mean, we really don't see it. People are being persecuted and prosecuted for their advocacy and for their work in privacy. And that is one of the most important essential components of censorship resistance. If people, we saw this with Tornado Cash participants of all types, even the relayers dropped off because they didn't have the privacy that they needed to continue participating in this protocol. And so when a protocol is designated as something to be censored, it's privacy that enables participation to continue there. So to tie this back around, I mean, we can speak about the user profile of those users that would use censorship-resistant stablecoins. Like, who are those people? Let's talk about that. We talked about capital controls in Venezuela, in Iran, in other places. Why do they need, to really hammer this point home, why do they need censorship-resistant dollars? Or do they need censorship-resistant dollars? Maybe it's not dollars at all. Ermin, I'd be interested to hear your take on this.
Yeah, it is interesting. I agree with a lot of the sentiment here, but yeah, I kind of wonder if people in the countries where inflation is rampant, whether is it a censorship resistance problem, a freedom problem, or is it a preserving purchasing power problem? So I mean, the data is clear on that. So in places like Argentina, they're not using ETH, which you'd think this would give you the biggest kind of freedom optionality, censorship resistant. They're using USDC. They want to be paid. They want to hold assets that can preserve their purchasing power. And I think that's probably an improvement. Depends on each individual and where they are. But I mean, USDC, and it's increasingly deeply ingrained within DeFi as well. And we've seen with Silicon Valley Bank, just a small sort of snippet of what the future can hold. Where one bank, basically there's a bank run, and the whole of crypto and DeFi catches that cold from that single sneeze, and the government stepped in, bailed them out, but it's like at what cost? It's like what has sort of come out of that? What's the message that sends? And for me, that message is, if you are a bank in the US and you are deemed too big to fail, you can take risk and you can make bets and you can take chances, and if it doesn't work out, you will be bailed out. So what's happening essentially in the TradFi system, it's not becoming more resilient to these shocks. It's actually becoming more fragile, and I think that's a real risk.
Anyone else? Michael?
Yeah, I agree. Kind of if you look at Argentina, with whom are they banking? With Justin Sun and USDT at the end. So, and I don't want to blame them. It just solves the problem, and the problem is, I think having an inflation hedge. So I think the censorship-resistant stablecoins cater mainly to people that are moving to crypto and crypto only, just kind of with the belief, I don't want to be reliant on a currency that is inflating and so on, and that have shifted kind of their wealth and future into that, and for example need liquidity for that, or just feel better that they don't have to exit the fiat rail up to the Fed, like Sebastian has shown, really this nice pyramid of LOE, LOE, and LOE. They just feel better to say, hey, I believe in Bitcoin or I believe in ETH, and just from a dollar diversification point of view, you know, it can make a lot of sense because such stable coins like LUSD have a totally different risk profile than all other stable coins. So I think these are more the use cases. Otherwise, probably the demand would be already bigger. And kind of these solutions that are cheaper, yeah, because these people can't kind of afford the transactions on Ethereum, are using right now, just out of necessity, other things that are solving their problems more cheaply.
There's a little nugget of wisdom that originates in internet forum moderation, which is that if you make a website whose main value proposition is we don't ban witches, is the term that they used, you get a website where every user is a witch. And this is not meant to be an aspersion in this case, but part of the problem is that the average person who's using a bank or using a stable coin isn't thinking about the worst case scenarios of censorship resistance. They're thinking about ease of use, ease of access. And so a big question for me and for people who are building in this space is how can we make it just as easy and well integrated to use censorship-resistant stablecoins as it is to use USDC or USDT? Or conversely, how can we make those existing stablecoins more censorship-resistant also?
Yeah, so that's a really important point. I think it's and it's tough because in a lot of cases you see the things that are most censorship-resistant and more privacy-oriented are really highly technical, and they don't abstract anything away. They want a Linux command line, and for the average user to use it, it's impossible. They're never going to get Argentinians or Venezuelans using these kinds of things.
So I'd kind of love to get a temperature check on like yield-bearing stablecoins. Because I've heard them described in like, I mean a bunch of different ways, but I think there's like two main ones. And the first one is that like they're a Trojan horse, right? It's like if you go to like a normie and you're like, well, you can have this physical dollar here, or you can have this like digital dollar, you know, that will accrue you, you know, 5% risk-free rate yield, you know, annually, at least with current monetary policy, right? And this is how you get normies on board, right? Because like, oh, like I can make money, right? Great. And now they're used to transacting in crypto, right? And you can like crypto pill them like further. The other way I've heard them describe them as is that they're a bastardization of a censorship-resistant stablecoin because the yield tier tends to be funded by treasury bills. Which automatically means, right, you have this stable coin that went from like decentralized reserves to now like censorship-prone reserves, right? And so you've forsaken the purest ideals of censorship resistance for, you know, growth hack, you know, quote unquote. So I'm kind of curious, like how do the rest of you like see this? Like, do you think we can do both?
Yeah, I think it's totally neutral. I mean, with Liquidity V2, we're going to have a stable coin that should have a market rate, so at par with Treasury, which is kind of pure on-chain yield from other crypto borrowers. So we just haven't built the alternatives, so there could be there. And I think it's also fair to say if you have something very safe, and then just kind of the stable coin is the rail to access that yield, which I think is fine too. Like a Paxos dollar, is a very safe dollar if it gives me the 5%. And I think that's a totally valid use case to get that with a stablecoin really easy, you know, because it's much harder for me as a retail user in a bank. So for me, it's less how easy it is, if the yield stablecoin is also a Trojan horse. I think what's underestimated that people don't understand the different risks that are behind. You know, nobody has an idea probably that if they hold dollars in their bank account, how much risk there are holding. They think they're sitting there while some crazy bank managers are investing in real estate in China with it. They never would do that, you know, and they don't understand it, and I had to learn it too. And a stablecoin like the Paxa one is probably the safest one you could hold if you want to have ties into TradFi. And they wanted to ban it in the US. So I think for me, it's really also a bit an understanding where are the risks in these systems and how can I deal with it and what am I holding?
Yeah, it's a tall order to ask the average Venezuelan to look into the risks of various stablecoins. I'm curious, and I think that I'm curious whether you guys think we're going to see an influx of those types of users using either censorship-resistant stablecoins or yield-bearing stablecoins for, and what would trigger that event? Like, is that something you guys consider, is how to capture this large total addressable market of censorable stablecoin users?
I think in some sense that genie is already out of the bottle in that, so this will be me putting my economic historian cap on, so stop me if I get into too much jargon, but there's a concept in banking called the deposit franchise. And this is what the business of a bank really is they want to acquire users who are not interest rate sensitive, right? Who are using the banking for the payment rail utilities, or maybe you have a mortgage at that bank, so you also keep your balance at that bank and that sort of thing. And when someone buys a bank, that is really what they're buying. This set of idle capital that is sticky and which is a revenue generator. But now, even outside of crypto, with the rise of banking apps, mobile banking, and there's been much lower friction for users to switch products. There's been a big bloom in non-crypto fintechs, and I think there's a trend worldwide towards users being more cognizant of mobilizing their capital and switching between opportunities. And this is only being further driven by our shift into a more inflationary monetary regime, which shows no signs of going away in the foreseeable future. So I think that there's a big opportunity there for crypto as far as offering lower risk to people in many countries with the same types of yield that people can easily access. In the developed world, there's many countries that don't have high quality local banking systems that still have those same type of interests.
Yeah, and maybe looking into the future, I see it very black and white. I think we'll have a lot of regulated stuff, like you see in MiCA, or then fully decentralized stuff. I think all the gray area we have today will start to disappear. It will be very hard to move around once US has also regulation and other stuff. So I think it's going to be the two extremes. And it's fine to have both, I think. I'm a fan of the choice. And so you have the regulated ones and the decentralized ones, which I hope and I think should be there as long as they are decentralized, and which then have the benefits that they are more modular, can be used more freely. And I mostly see these two use cases, how it evolves. And then on the regulated centralized side, then it's more kind of this direct new rails, which I think great, which makes it much easier to move stuff around more freely around borders. So if that works, yeah, I think that's great too.
Yeah, I like that perspective, and I like your original framing of the freedom-promoting aspect of having many different stablecoins. Its freedom of choice is enabled by having a censorable stablecoin with a whitelist or a blacklist, and a completely censorship-resistant stablecoin that might not even be pegged to anything like FlatMoney. And it's kind of a tricky issue for those of us that would want to see more censorship-resistant stablecoins, because to the degree that the censorable stablecoins work for people, you don't need the censorship-resistant stablecoin. I'm curious whether you guys see the world evolving more toward the need for censorship resistance broadly, and if you think these kinds of stablecoins are likely to catch on more in the future for a variety of reasons, and or not.
Yeah, I think there's been some interesting kind of questions raised in the panel. For me, when I look at, say, yield-bearing stables, you can compare, say, the Argentinian peso to the US dollar in terms of inflation. We might look at the US dollar in terms of like yield-bearing stable coins, flat coins, float coins in the future as well. But the question is risk, and like even for crypto natives, it's hard to assess the risk, let alone people who are looking at it from the outside. And especially, how do you evaluate tail risks? In particular, black swan events happen from basically not picking up those tail risks. I couldn't tell you what the US regulatory policy in crypto is going to be next year, let alone in 5 years or 10 years. I couldn't tell you what we can see is the data which has been sort of brought up is, the US is running deficit year after year. At which point do the US government bond holders, treasury holders have to take a haircut? And you know, what's the impact of that? And these are really, you know, the risks that are not being, you know, thought about today, but you know, these things can come very quickly, and I think that's where the freedom of choice will really come into play, and we should set up for that future.
The other thing I just wanted to throw in there in this regard, bringing back in more of a political than a technological question is, I'm sure we're all familiar with the concept of a tax haven, but there's also the idea of perhaps a regulatory haven or a privacy haven. And so we're just at the early stages of regulatory competition in crypto, right? Where different states realize that there's money to be made by making a more attractive environment for crypto owners, crypto businesses to operate in. So that's one thing that I'm hopeful for in the future, is that it's really the large and wealthy states that have an interest in performing censorship, whereas small nations may have an interest instead in taking the opposite tack and offering enshrined legal rights to privacy and things of that nature, and we can have a little bit of back and forth over it.
And you know, there I see really the potential of DeFi. Because it's very interesting if you look what happens with USDC. Now they're running under MiCA and in the US, but they're fungible. That's somehow crazy. Now you have even another tax haven, and they want to cater to that jurisdiction. At the end, they need to cater to 20 jurisdiction, keep that thing fungible. That's crazy. Imagine, I don't know what they do if everybody redeems in the US, what then the MiCA regulators. So regulation makes it very complicated because the cross-border stuff. And if we can keep, and there we should fight for that, if it's truly decentralized, it should be borderless. That would be really kind of the proposition where DeFi can shine, because now a stablecoin can still be global, which will be much harder for the regulated ones if they need to cater to 120 jurisdictions at the end and keep the thing fungible. Then their stablecoins become kind of liquidity crunch where the DeFi stablecoins could kind of shine.
Interesting perspectives. Yeah, I think that, again, going back to there's sort of like two types of decentralization at play here. There's the decentralization that comes from the many different choices, and there's the individual's ability to choose. And then we are also, in a lot of cases for censorship-resistant stablecoins, baking decentralization into the protocol in some way on like a more micro level to effectively create that censorship resistance. But in both cases, freedom of choice is preserved. I want to circle this back around and give each of you the platform to speak a little bit about how you've built censorship resistance into your protocol and what the additional design constraints were for designing decentralized or censorship resistant stablecoins. How does that complicate the design process, and what were some challenges that you faced? Anyone can step up first, but expecting Michael and Ermin in particular.
Yeah, I mean, for us, we really wanted to. We saw the issues and kind of with the CDP model, and we wanted to really try and move away from that. So yeah, as mentioned earlier, you know, if you want a low volatility asset and you want to be able to mint this low volatility asset, you shouldn't be taking on more volatility. That's one of the downfalls, and that's been discussed in previous talks as well. So what we've done is put on chain a delta neutral position where you're long staked ETH and short staked ETH at the same time. So on one side there's basically high volatility side, and then the low volatility side, which is the flat coin. And we wanted to make sure to not have ties to any traditional finance. So there's a lot of new stable assets, and underneath, when you dig through the layers, it's like, oh, this is like USDC or something along those lines. So we wanted to just really back it with ETH or staked ETH. As I mentioned, we're using Rocket Pool's RETH to make it sort of as resilient as possible.
And I have a question for you, because designing it and you want to give as much power to the user. I think the elephant in the room right now in DeFi are oracles. At the end, I think that's the biggest tie and
it's the
control.
Achilles heel.
Huh?
It's the Achilles heel of any protocol.
Yeah, you can shut down DeFi by pulling the kill switch. So I'm wondering how you see that. I think that's the biggest challenge to kind of deliver on our vision in DeFi.
Sure. So I would say that oracles in general today are much too centralized, right? I think regardless of whether you've intentionally designed it this way or not, I think every Oracle provider knows either through a button or what sequence of actions they would have to take, right, that would bring the Oracle down, right? And so that's already a big problem, right? An Oracle that doesn't update, right, stale data, now a stablecoin could go insolvent, right, given the right kind of market volatility or movements, right? Then you have the whole aspect of like, well, can you actually manipulate the price? Which is a much worse problem, right? Because now you can actually just like drain all of the assets out of a protocol. So yes, so on the Oracle front, I mean, we have to take the, I wouldn't necessarily call it censorship resistance, but I would say decentralization extremely seriously, because if we don't, then it doesn't matter what everybody else does in terms of like complex mechanism design on the end protocol. If your Oracle's not decentralized, like it's all for nothing, right? So while there's a lot of different factors at play here, I'd say like the litmus test you can do with many of the Oracles is just kind of like, who are the validators and like how many are there? And what you'll find is a lot of the Oracle protocols, like they are their own validator, and it's like one of one. Or they're like, no, but we run 4, and like, yeah, but all 4 of them are you, right? So what we've done is we've essentially created a network of like validators that are just what we consider like the influential like projects in the space that users already have some kind of like trust relationship with. So for example, like we have Gnosis as a validator, right? So maybe as a user you have a Gnosis safe, right? You're like, okay, I trust Gnosis. Or we have Etherscan as a validator, or Infura, or Gitcoin, right? So maybe you've contributed to Gitcoin grants, right? And so it's not about as a user that you trust any of them individually, but just saying that as a set, like, yes, I do trust this consensus of this set. And so actually, and I was going to announce this like later this week, but I'll just say it now. We're actually onboarding a new wave of validators at the end of this week, and it's going to be ETH Global, Bankless, Mantle, and Euler. And that's just going to be the first wave of many, and we're going to be integrating more and more and more on a monthly basis. And so the end goal that we want to get to is this almost like community, like crypto community powered Oracle, where you say like, okay, I trust the consensus of this Oracle because it was made by this, you know, basically by the crypto industry. And if the industry were ever to have consensus against itself, I mean, that's just cannibalism. It's possible, but highly improbable.
It's really interesting because it's kind of like an alternative to proof of stake mechanism where you have the business and the reputation of a company that is essentially backing the reliability of the data they're providing.
Exactly, yeah. And then the only thing you have to be careful about is who holds the ability to add or remove validators from this set. Because again, if it's just that Oracle company, then the Oracle is still centralized, right? And this is just decentralization theater.
And who gets to push to the GitHub repo?
Yep.
I'm kidding a bit,
Yep.
but yeah, it's a very hard problem trying to, maybe even an impossible problem, to make a fully trustless stablecoin that has no manipulability in the price feed. So this is something that I'm very interested in at a technical level. We have an Oracle-free lending protocol, not a stablecoin, because it's a little bit different than trying to guarantee a precise exchange rate. Like something like Liquidity, if you wanted to offer redemptions, which is a very good mechanism, but you can't do that with the type of like auction style model that we would have instead of an Oracle price feed. There's been a lot of really cool work recently with AMMs and different types of AMM time-weighted average prices, including liquidity weighting and other things like that. So I think there's some promise there. The issue with that is that there's a trade-off. With any stable coin, only a certain percentage of it will ever be in an on-chain liquidity pool, right? And so if you're trying to manipulate that pool, you know that the amount of value you have to target will always be so small compared to the total size of the protocol. So there are all of these limits. And I won't go into too long and technical of a rant on that, but really encourage everyone to read Michael from Euler's publications about TWAP manipulation and costs. But I'm interested to see with some of the new style AMMs that are coming out, and like Uniswap v4, how we can keep pushing that forward.
Definitely. Okay, so I don't know how much more time we have, but I would like to get into maybe solving some of these problems, or what do you, each of you, feel is the necessary step or the set of steps that needs to be taken to get more adoption of censorship-resistant stablecoins? Or if you want to answer a different related question, how can we get more people building censorship-resistant stablecoins? Because that might be one of those solutions.
Yeah, some of the points that were touched on, I think oracles play a really critical role within DeFi. And obviously right now there's this kind of new wave of oracle-free, oracle-less protocols. I almost feel like if we didn't have oracles in the early stages and we only just now introduced oracles, we'd be talking about all the efficiency gains that oracles can kind of bring on board, and the ease of use for end users that it enables. Because what we don't want is, in my opinion, is just to make it more complicated for end users where only sophisticated actors can kind of play, where they have to, manage their own parameters and not rely on oracles. So I think, yeah, this ease of use is just the most important thing. And maybe a single oracle provider doesn't give you the guarantees that you necessarily want in your protocol. So you can use multiple. I think that's the freedom of choice, I think, and integrating into your protocol multiple is also a good design decision.
Yeah, my take on it is maybe, we need more innovation. So pity that Dave from Ajna isn't here, or kind of we do not more innovation and exploration, how we can do stuff without oracles. But on the other hand, we can build as much as we want if the demand isn't so big. And I think the market sends a very clear signal. Market doesn't care that much about censorship resistance. It just needs to be convenient, do its work. So maybe where could the push come from? And interestingly, maybe probably from regulation, as I said. Because kind of the gray area is getting tougher and tougher. So we need to build more stuff like that in a decentralized way to keep kind of DeFi and this modular financial system as is. So kind of, a bit contrarian take. But yeah, I think that could force us to innovate even more into that direction, because the air in between, gets less and less.
Yeah, I appreciate that take. It's like, with Mika just coming around recently, I think we look at that, and a lot of people are saying this is great. We're getting clear regulation, and it lets decentralized projects play a little bit more, and doesn't have such strict regulation. But they don't realize, to your point, that Circle and all these other, many other protocols are now subject to not just Mika, but the regulations in the US and in Asia and in all of these different places. And so the ability to work in the gray area shrinks over time, because you're not subject to just one set of regulations, you're subject to all of them. If you have to, if you have to comply with one, you're probably going to be complying with many.
And I meant in the gray area, if you have ties to TradFi, it's just kind of harder, because these TradFi players will have a harder time to work with you. And, on the Mika, let's not call it regulatory clarity. I hate that. Who wants regulatory clarity? We want just kind of financial freedom. But, just to give you an example, if Tether would have been probably Mika compliant, the stablecoin would be worse. You as a user wouldn't be better protected, because I think Mika says you need to have some cash in a bank. That's the worst place to have kind of your backing. So kind of, it's mind-boggling, and let's be very careful. And that's for me not regulation clarity. Kind of on the day which Mika comes into play, nobody can say nobody's there to answer, hey, what can I use now? For me, that's a bit a failure. They need to do better if they call that regulation clarity.
So I think the original question was like on how can we boost adoption. I think you know, and I don't want to disappoint anyone, but I think we're in for like a decade of consolidation. The thing with new stablecoins, right, is that maybe they have a superior mechanism, right, or they have some innovative new mechanism. But for an end user, are they going to study all that? Probably not. And it just comes down to what is the utility of the money. And if that money is not widely accepted, then it's not very useful money. And so when, you know, a user gets introduced to stablecoins, what are they going to be introduced to? They're going to be introduced to the largest ones, right? The ones that are accepted in the most places, right? And it almost becomes like a Visa type of situation, right? Where Visa is entrenched not because they have the cheapest fees or anything, right? But because their moat is that they are accepted everywhere, right? And it's as an engineer, as an innovator, right? Like that sucks, right? Like I want to believe that if you build the best thing, right, that thing will win. And unfortunately, it's not that, right? So really today, what you need to succeed is not just to have the best mechanism, but also to have like the best growth hacks, right? And so, I mean, looking back, like there was like that stablecoin Fei, right? And like you can argue a lot about the mechanism or the execution, but the long and short is that they managed to scale a stablecoin to the scale of billions within the first week. And that's impressive, right? And so if new stablecoins want to succeed, right, they need to figure out like those growth hacks, right, to even stand a chance, because the mechanism design alone is not going to cut it.
Yeah, partnerships and marketing are more important for stablecoins, I would say, than most other protocols. You need somewhere to use the stablecoin or somewhere that it's accepted, and sometimes that's a lending protocol, and sometimes that's less often it's a flagship point of sale system, right? There's not that many people going after crypto for commerce in a B2C way anymore.
I will say the Gnosis Pay stuff is really encouraging, right? Because it means that maybe as a crypto stablecoin, right, you can just get Gnosis Pay to integrate you, and then the end user doesn't have to care about the integration side, well, the merchant checkpoint side of things, right? But again, we're depending on Visa rails, and so yeah, your ownership of the money is censorship resistant, but your spending of it is not if you're using Gnosis Pay. So there's still some work to be done, but it's at least encouraging to see that happening.
You brought up exactly what I wanted to say, which is that if there's one thing we could do to boost adoption, is that I'd love to see a more collaborative industry-wide effort around open standards for payment systems, right? Like, where is the crypto version of the little square card reader, you know, that all the farmers markets can start using? Of course, today it wouldn't be physical, it would just be an app. But, you know, I'd like to see something that, if we think about USDC, USDT, and these other stable coins starting to compete for real-world payments applications, it would be nice to see shared rails and not walled gardens. And that's even for ETH or Bitcoin payments, whatever it is, right? Everything can use similar software tools, and if we could get merchants willing to accept payments, you know, do clearing with that and cut out the Visa fee middleman, that would be pretty cool. And the friction is low, right? You can still accept Visa, it's just, oh, I take this and this. If you don't have to pay much for it, and then there's work to drive adoption, I think there's potential there.
Yeah, I'm with Nick in that I think we're due for a consolidation period over the next 10 years, and I think that's actually a good thing, especially for censorship resistant stablecoins. So I think now there may be the opportunity for those kinds of businesses to be profitable, or those kinds of standards to be created, where before it was who's launching a new protocol that's going to get $1 billion and have a token that we can dump for a 90% decrease in its value in the first week, to now what kind of business can we build around payments and around a point of sale system and maybe things like that. I think Gnosis is one of those ecosystems that does a great job at focusing on censorship resistance, so I want to call that out and I appreciate it being brought up. The thing that I didn't hear brought up, I'm curious on your takes about, is our own type of regulation. We have appraisers like Blue Chip, for example, I think are really critical for the space to move forward, and I wanted to hear if you guys had any other takes on how we can do sort of regulation but consumer reports on behalf of users. Like, regulation is just to ensure quality control, and we know governments don't do anything well, but they, they certainly are not able to see into the depths of crypto. I think we need to do that ourselves. Looking for a bit of either pushback or affirmation on that idea. Does anyone want to riff?
I guess I just, because I spotted him in the audience, I'll just shout out the chefs at StakeFi and some of the other sort of DeFi expert groups that do a lot of good work providing dashboards and analytics. Like a blue chip type of letter rating is one thing, but it's another to be able to peel back the books and say, oh, it's backed by this much collateral and here's this borrower position at this much risk. So I hope that, all stablecoin providers will continue to invest in providing those types of transparent tooling for their users. There's quite a few good providers out there these days, a few of them who are among us today.
I was thinking maybe we should be looking at using crypto rails to improve the existing regulations to basically have a lot of magnitude better regulations, like even KYC AML for people that sort of dug into it and looked into it. It's not super clear just how effective it is, but there's a considerable cost on it as well, right? So can we actually design better systems on chain to handle those types of issues?
Do you think the kinds of efficiency gains that you would get from having on-chain alternatives to that would be worth it?
Do you know how expensive KYC is? It's ridiculous.
Yeah.
It's friggin' ridiculous.
What kind of efficiency gains are those? Like, what percentage do you think can be offset?
Well, I think it's more just like taking the one-to-one relationship of number of things that you need to KYC to and needing to KYC with each of them, and converting that into a one-to-many, right? Where there's just one KYC provider you KYC with, now you get issued some kind of KYC token to your wallet, and now you don't ever have to go through that sluggish, expensive process ever again, right? And I think that's just a matter of time, right? And there's no big technological hurdle. It's just someone needs to get over the little kick in the S curve, in terms of growth, to become the consolidated player that everybody uses, right? Because if there's just like stablecoins, if there's 10 competing KYC providers trying to do this, great. Now you're doing this KYC thing again and again and again, right? So a good thing for Masayoshi-san to brute force with money.
So does that, and that KYC provider, does that inevitably lead to WorldCoin, or can we do something different?
Oh, I mean, depending on where on the spectrum you fall of regulated to unregulated, right? You may not care about doing KYC AML, right? But for the regulated DeFi, yes, right? Let's have better UX and let's make it more sustainable. So you're not paying between $3 to $30 a head for a KYC.
Yeah, I'm not convinced that KYC needs a token, but it does make sense to use zero-knowledge, privacy-preserving technologies.
Sure.
And you mentioned the numbers. I mean, it's worse than $9 spent on compliance costs for every $1 of genuinely criminal money stopped flowing through the system. So it's pretty bad. There's a pretty good opportunity there.
All right. Well, any closing thoughts for you guys? Any topics that we didn't hit on today that you guys wanted to talk about or bring up related to censorship resistance in DeFi or in stablecoins? All right. Well, I think we're going to wrap it up here. It's been a pleasure talking with you guys. Thanks for joining us, everyone. And appreciate it.